We bring in Hugh Simon. He is the CEO of Hamon Investment Group. He's also fund manager of the Dreyfus Greater China Fund. He manages about $1 billion. He's been investing in Asia for about 25 years. Hugh, thanks so much for joining us. Glad to have you on the program. Before we talk about China's monetary policy, I want to start on this specific sector look. What do you make of this new home price data? We know Beijing's newly home prices went unchanged in March. Newly home built prices, I should say, Shanghai only up 0.2% from March. So it seems like the cooling measures are working, right?
Yes, I think they are. They're starting to implement these measures, which are administrative measures. It's not just interest rates. As you've seen, bank reserve requirements have been tightened, lending requirements have been tightened, and they've a number of other measures. But it seems that it's starting to mean that the transaction volume has started to ease, and then prices are stabilizing. Certainly in the major cities, which is a good thing.
It's a good thing. So does this mean, Hugh, no bubble? Because there were a lot of investors saying this is one thing they were worried about when they were considering investing in China.
I think the market still, and certainly investors are still talking about a bubble, but normally the ingredients from a bubble means leverage. You need to have a lot of gearing. And for quite some time now, the banks have required investors or people taking out a home to put 30 to 40% down as your deposit. And therefore there is less leverage. There isn't so much leverage in the individual level. And also there are a number of other measures that if you sell the property too quickly, within a certain period of time, you get extra tax, stamp duty. In Hong Kong, it's very high. If you sell it within 18 months, it's something like 16% stamp duty. So it's stopping people, churning or speculating in property. And the same, it varies from city to city in China. But the same thing, a variety of administrative measures, banking measures coming into place, which is cooling the property market.
So it sounds like it's not like the U.S. where people financed 100% of their home, and that obviously contributed to the financial crisis here. Hugh, before we let you go, though, I want to ask about this monetary policy, because China announcing this increase in the share of deposits that banks have to have on record. Does this signal another interest rate raise sooner rather than later? And if so, when?
We think in the second quarter, you'll probably, second or third quarter, another one. The market, another interest rate, but these are gradual measures and the market's expecting them. And so it's priced in. And I think that it means that the second half of this year, you'll start to see the government maybe not being so aggressive with monetary policy, the market looking forward, and you'll start to see some price rises, not necessarily in property, but in the stock market, anticipating. And therefore, we think the market is starting to look attractive.
Hugh, thanks so much. Hugh Simon joining us there. He is the CEO of the Hamon Investment Group in Hong Kong.